The main problem why many people fail the exam is that they are trying to attempt the wrong exam. Look, the examiner is not planning to test how smart you are. They gave you the syllabus and they want you to answer according to the syllabus. They are testing the skills. They are testing the skills of you being a performance manager, not strategic manager, not marketing manager, not financial manager, just performance manager. And what does it mean? It means to know how to balance carrots and sticks. So when we are attempting an exam, we need to know our role, and we are performance managers. So we came to the company to make the processes right, to make the processes in such a way that everybody is trying to aim to whatever they're trying to aim, whatever they need to aim to. And that is it. As such, it is not our job to come up with a strategy. So every time you say that the company should diversify, it should go to some new markets, every time you try to apply a model such as, let's say, pastel model, instead of saying how it can be used in managing the company, this means that you are answering the wrong exam and you just do not get marks. So coming up with the strategy is the syllabus of strategic business leader. And the examiner has already tested you on that aspect, and the examiner does not plan to test you again here on the same stuff. It is not your job to analyze the performance. No, as such, when the question is to analyze performance report, you cannot say that revenue has increased. You cannot say that net profit is higher or lower. No, that is not your job. If the question is set as analyze the performance dashboard, analyze the performance report, you need to say whether it is helping the company that it measures whatever it is measuring or whether it is not. And we are going to study how the performance report should look like and what are the types of measures that are needed, what is the difference. It is not your job to calculate financial aspects of a project. So even though here we have some theory on NPV, on modified internal rate of return, it is very unlikely that you will be asked to calculate those. And even if you will be asked to calculate modified internal rate of return, you will be given a formula. So no worries here. However, it will be your job to discuss the benefits, the drawbacks, the limitations, what do we need in our information systems to change to introduce those metrics, and so on. So what is that you can do as a professional? Well, first of all, you can come to the company and criticize the measures that they are using. Once again, an example. So imagine you have a teenage kid, and the teenage kid wants to lose weight. So they put their kilos or pounds at the back of the bathroom, and every day they're standing up, weighing themselves, putting the number on, and so on. Will it be good? Well, you know what? I would say that teenage kid may start to starve themselves to death. That's because they have this goal of losing the weight. They have this goal from turning, let's say, from 70 to 65. And that is the natural thing to do. However, if you think carefully, what is that kid actually want? I think that the kid wants to look good. So they want good body, for example. Well, it's unlikely they want a good health at this very age, but it's most likely that they want to fit in their pants. Okay, so what does it mean? Well, it means that the more functional metric would be the quantity of times that they have exercised during the week. Or, for example, how much veggies they ate, because the more veggies they eat, the less stomach room they have for some junk stuff. And if you put these measures, such as minutes of physical activity or kilos of vegetables eaten for a week, then you are going to make your kid act more functionally. The same in here. If you come to a company and they have net profit as their overriding measure, what may happen is that they will cut their expenses on marketing. They will cut the expenses on research and development in order to get this net profit for the managers to receive their bonuses. But what is going to happen? Well, what is going to happen is that the company will lose its long-term competitive advantage. And we do not want that. So it will be our job as performance managers to criticize the measures that are used. We will look at the data that we already have, that we already collect, and would think about what is the data that we need. So when you come to the company and try to improve their analysis, what you see quite often is that they have their accounting system and they take only debits and credits. But then you will say, well, you know what? To actually beat our competitors, we need to know whether the customer likes our product or not. As such, we need to know how customers value us, so we need to collect customer satisfaction. So we need this data. Or, for example, to satisfy the customers with new products, we need to know how many of new products we have offered to the customers. So that is going to be a new measure. And yes, it may befuddle you because I know that you come from work experience where you like everything to be precise, to be super accurate. And we do understand that customer satisfaction or a number of products is something that can be not so easy to measure. It can be vague, it can be subjective, and so on. Yes, these are the drawbacks, but also they provide some relevance to us. Well, take Google reviews. If a restaurant has good Google reviews, then more customers get in. If the Google review on average gets worsened, then we see less customers or the customers that are not willing to pay that much money. So we will think about the data that we need. And also, it will be our job to communicate with software developers and to introduce the new software. So we will say, okay, the problem is that we do not really manage our customers, and that chunk of information is missing out. So we need to have this additional feature introduced to our current performance management systems, or we need a brand new system. So we will have to tell the software developers what we need. And that is what the examiner is going to test you quite often. So what else is in our toolbox? Budgeting. We will discuss different types of budgets and when do we need what type of budget. Because yes, there are different kinds and some of them good in some circumstances and some in some other circumstances. We also can impact quality and we will study quality management and also how to motivate people. So we will talk about human resource management. So to sum up, advanced performance management is doable and relatively easy if you are answering the exam that you came to take. However, the majority of students start by making wrong answers because they just try to answer strategic business leader or financial management exam or whatever the exam they have passed. And that is wrong. That does not let you to get into the marking scheme and get your pass rate. And we are going to fix that.